Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be talking about the last night's Top Gun Maverick event, the state of the markets today, and the revenge of the discount retailers. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. Last night you hosted a private client event over 170 people for an early showing of Top Gun Maverick. What were your thoughts on this movie?
Well, hey everybody, and good morning, Allison. Yeah, last night was amazing. It's been 36 years since the original movie, and it was everything I wanted it to be. Not only from an event perspective, being able to rent out a theater, that was pretty fun. Having 170 plus people there, that was pretty cool. Clients and friends and family, and then of course, my daughter's there too. So I do have to ask. This was 36 years ago when the original came out. What did you think of the movie, Allison?
Well, if I'm being completely honest, I haven't seen the first one, which is a total shocker since, my family and you loves the whole entire movie. But I really did like the movie, and I definitely understand how a movie like this could inspire someone like you to be a fighter pilot. Because I never really understood what it meant to be a fighter pilot, but after seeing this and how big the risk you have to take, I could definitely see how you'd like it so much.
Yeah, it was fun, and it's a movie, so there's some things that are obviously being sensationalized. And what I always laugh about, and all the other fighter pilots out there, is in the flying business. When you go to shoot down another airplane and you're chasing them around, you don't get within generally a half a mile, which is still pretty close. But in the movie, they're like 50 feet behind each other. Well, just imagine if you're shooting your gun at the other airplane, the reason you want to be at least half a mile away is if they, hopefully you're shooting them and they blow up into parts, and well, all that stuff would go right down your intakes, right? If you were if you were actually that close to them, so you'd be shooting yourself down by shooting them down. But yeah, it brought the appropriate level of cheesiness back from the first one. So even for folks that have not seen the first one, and the first one is really, it's so 80s, right? I could see how some people could almost consider it unwatchable because it was so cheesy back in the day. But it was a lot of fun. For friends and family. My parents were there. You can see them in this picture that I brought up. And then a niece and nephew were in town for the movie. And then, of course, my daughters. And then, of course, the rest of the theater. So a bunch of people came out. A lot of Top Gun T-shirts and some jackets and some cool Top Gun stuff. So all in all, it was a great time had by all for our kind of what I would consider the first ever Ankerstar Wealth private client event.
Next, after almost 2 straight months of selling, are the markets going to break the streak this week?
Well, we'll transition from the fun times of going to watch a movie with everybody back to the pain of the markets. And you're right, Allison, 2 straight months basically down, right? Let's go to the tape. We'll pull the NASDAQ tape here, even if futures are up. So I want to show you that first. So there is positive news, at least this morning. But really, when you look at the QQQs, this is the 1-year chart. Obviously, the 2 months that Allison is talking about is from the end of March 25th here that I have marked. Technically 29th or whatever was the high, maybe. But yeah, 2 months to the day, right? Sitting here at May 26th, and it's been sell the whole time. So is the bottom in? I thought the bottom was in a week and a half ago here. It did not hold. It's down here. It's back up to that level. So we shall see. If you zoom into the 3 months, we've got some hope. We said it wasn't going to be a V-shaped recovery like COVID was. It's going to be more of the bathtub recovery, or that U shape, if you've heard people talk about that. The issue is you just don't know how long it's going to be in this area. But overall, NASDAQ's down, 20, 25+% and kind of holding. A lot of tech names out there. You'll hear me talk about Apple all the time. They're attractive now. Goodness, Apple below $140. It's like, yes, please. How much can I buy? That sort of thing. Amazon, Google with their 20-for-1 splits coming up. Cybersecurity has sold off ridiculously for no reason, because the world needs cybersecurity. So a lot of opportunities out there, which is when it is painful. There's no doubt about it. If you want, especially if you're paying me, simply look away because I stare at it every day. And I'm looking for opportunities through this volatility. And that's where you can truly make a lot of money, just like we did in March 2020. But it's not tough on the, or it is tough, excuse me, on the psyche. Sometimes when you're watching the balance of your portfolio that you spent a lifetime to build, shrink significantly. So hang in there. The market's undefeated in its record of coming back bigger and stronger and reinventing itself. So I don't have any doubt that it'll happen again. But this is the time may require your patience, and on into the elections may require your patience. So I don't really see the catalyst for things to go screaming back higher unless we start seeing some significant changes out there.
Last, Dollar Tree and Dollar General both beat earnings just 1 week after both Target and Walmart missed earnings. Is it time to invest in a discount retailer?
This is interesting, right? Because we had Walmart and Target get so hammered last week to the tune of 20+%. And here you have Dollar General, which is DG, and then DLTR, which is Dollar Tree. These are the discount retailers, along with Five Below, and you could lump in TJ Maxx and Kohl's along with there as well. So where are people spending their money is the thing. So, inflation, showed up in January. Shocker, right? It was more brutal than we thought, and it's still sticking around. So people are saving money by going and buy things at the discount places instead of even going to Walmart or Target. So that's part of it. There's some wage inflation with Walmart and Target obviously needing to pay their people more, cutting into their margins. Maybe the discounters don't have to do that because they're not quite as big. I don't know. That's speculation. But really, when you look at these numbers, you see the same story and a lot of people ask, why is Amazon selling off? Well, it's the same reason Dollar Tree sold off. Here's your one year chart. Excuse me, Dollar General. I pulled that one up first. This is last week, right? This is where Walmart and Target missed earnings. Well, there's so many index funds out there that are thematic, meaning they're all the retailers are in them, whether it's discount or luxury. Lululemon's in there with Dollar Tree, right? Do those companies have anything to do with each other? No, they don't, but they're in the same index fund, so they get hammered. Same thing with Amazon. They bring stuff to your door like multiple times a day if you're in my house. They got hammered because they're all in the same index fund that people were just selling. So things can overreact to the downside, and that's what you saw really out of Dollar General. Here is the first one I pulled, all the way down to 190 and now up to 219. When you look at evaluation, though, this is kind of interesting. PE of 19. So it's like, really, that's kind of barely a discount to the overall market. And then you look at Dollar Tree, it's got the same chart, so I won't even bother showing you that. But the PE of 23, like, okay, 19 and 23 for discount retailers with kind of razor thin margins. I want to show you maybe why I like Apple versus discount retailers is you get down here and Apple's even cheaper than Dollar Tree, right? So when you look at the strength of companies and the valuations, do I think Dollar General and Dollar Tree are buys here? Not really. It's still retail. It's still going to be at the whim of the consumer. And, there's a flight risk. Folks can stop spending money. But to me, Apple is a retailer. It's it's a tech firm, but it also sells a ton of stuff. But it commands, has a loyal following and commands those higher margins because of the expensive products they produce. So if I'm going to get a stock for, the same price between Apple and Dollar Tree, it is literally Apple all day long. So an interesting moves, of course, in the space of retail. And why would you have Walmart, Target, Dollar General or Dollar Tree if you could have Amazon out there just pretty much as cheap as well? So.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.